Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. I want to thank you so much for joining us today and welcome you into America's Retirement Headquarters, home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners with Nolan Baker. 419-794-3030 is the phone number. Once again, it's 419-794-3030. You can find out more about the team, set up a time to speak with them on the website. That is arhq.com. My name is Chris Swan. Today on the show, interest rates are in the 4.5% range. Are there still opportunities? How to create an income plan for retirement, and what's Warren Buffett's #1 estate planning tip? All that and more. But before we dive in, let me check in with Nolan. Nolan, glad to be with you for another show. How you doing, sir?
Doing fantastic. I just want to say congratulations to our Anthony Wayne Generals, the high school hockey team. Played a great season, made it pretty darn far. In fact, a week ago, I know the Anthony Wayne Generals won in double overtime to beat Perrysburg, and then finished up our season playing the #1 in the state, St. Francis, on Saturday. So the end of hockey season for my son as a high school senior is going to be some new changes in life, but looking forward to that next chapter, if you will.
You know, it's one of those things where there's a parallel, of course, into retirement planning, you know, the end of that chapter known as the working world and making that transition into whatever that may entail. So looking forward to seeing what comes next for your son and, you know, for you, and you get to enjoy that as well. But we appreciate you taking time out of your always busy schedule to spend with the listeners and the viewers here on the show. Let's go ahead and dive in. I want people out there to take a look at the balance in their 401k. And then I want them to subtract 10%. It probably doesn't feel good. The reason that I said 10% is because that's a normal occurrence in the stock market. On average, a 10% swing happens, you know, once a year or so, and it's actually been close to a year, over 300 days since the last one. We haven't had a pullback in the market, significant pullback in over 4 years. And 2008, which we reference so often here, that's now 17 years ago. Nolan, do you find that people are getting complacent when it comes to protecting their money? And do you think that a stock market crash could be coming this year?
It's, you know, dangerous to get complacent when you're thinking about the overall markets. In general, we're going to be talking about this at our economic summit. We've got a lot of wealth of information. We're going to dive really deep into this subject. So if you want to find out about what the game plan is for 2025 for positioning your portfolio, go to arhq.com, click on the events tab, and register for either our morning or evening session that we have coming out. We're going to spend about an hour and 15 minutes diving deep into this topic. But let's talk about a couple things right now. Mm-hmm. You know, first of all, what we have is in January 2025, the Federal Reserve had estimated that there was about only a 29% chance of us heading into a recession. So that number is, you know, drifted lower as some of the economic data that's come out. Could be a positive sign overall if we can avoid that recession. Going back to what they talked about, trying to have a soft landing, maybe that is going to be possible. Number two is the fact that they're cutting interest rates in a non-crisis environment, meaning that there's no 9/11, there's no financial crisis of 2008. They're cutting interest rates proactively, and that could spell good economic growth from companies that could benefit from lower interest rates. The stock market, on the other hand, is at elevated valuations. If you look at something like the Cape-Shiller Index, you know, that would indicate that the values right now are pretty high overall. I think one of the things that you want to do as an investor is, you know, be careful of some of the concentrated risk that you have. Be careful of chasing a hot investment. You know, a lot of times investors will be the last one at the party, and, you know, coming to be the last one at the party can be extremely dangerous. So you want to make sure that you know what you own, the valuations, the price to earnings ratio, trying not to overpay for the different investments that you have, being able to go out there and try to shop for where there are kind of some bargains out on Wall Street. You also, number four, need to realize that if you look at the economic data and you go back a year ago, you know, for many of you who came to our economic event, we had talked about what some of the predictions were in 2024 for the stock market. And they kind of ranged anywhere from people predicting 2024 the market was going to be up 10%, all the way down to some people were predicting the market was going to be negative 10% last year. And we now know, looking back, the market did not only double-digit numbers, I mean, it had almost a positive 20% gain. So you've got to kind of throw a lot of the projections out there. And the reason being is unexpected events can shock the stock market. So you want to understand that things can happen and the markets can turn in a hurry. If you think about going back to COVID, and the markets dropped really the fastest I think they've ever dropped in a short amount of time when COVID happened. And all of a sudden, the stock market investor who was feeling pretty good, in January, by March, saw their account values decline in the equities anywhere from, 30 to 40%. If we think about how fast the market declined after the terrible events of 9/11, or if we think about how fast the market went down in the crash of 2008, it's one unexpected event that could come up that could make this market move in the opposite direction. So here's what you need to do. First of all, you want to know what your current risk level is. When we put together the retirement team action plan for you, one of the things that we're going to do is we're going to run an independent portfolio analysis. Within that independent portfolio analysis, we're going to be able to help you analyze exactly what your risk number is. I had met with a gentleman just recently, and when he retired 3 weeks ago, he really hadn't made any changes to his 401k plan. He came in as a referral to take a look at it. And what I found is that he had 85% of his portfolio invested in equities and then 15% in fixed income. And while he was growing and accumulating assets, being growth-oriented, especially over the last couple of years, proved to be a great way to boost that nest egg. But now that he's retired and he wants to start pulling income to supplement his Social Security income, he's going to take money out of his, retirement account. A major market loss in the near term could be very dangerous for his situation. So when we did the portfolio analysis, what we had determined is that he had a risk score of 65. And think of that in terms of driving a car. At 65 miles an hour, if there's an economic crash, it could be deadly in his situation. But by going through that independent portfolio analysis, he was able to understand what his risk level was. If your risk level is then higher than what you're comfortable with, you might want to consider protecting some of your profits, putting in what I would refer to as a downside risk management system. There's a couple of ways that we could do that. For our situation and looking at Jason's situation, he had income that he was used to when he was working. And so when we looked at what his income was before he retired, and then we looked at what his desired income in retirement time, and you subtract his reliable income sources, both him and his wife's Social Security, there's about a $900 gap. So what we can do is we can take and we can reposition part of the money out of the stock market into an account that's designed to provide income to cover that. And by doing so, what we're able to do is protect that money, get it out of the market. So if and when the stock market goes down, he didn't have to worry about not having that income of the $900 a month. That allowed him to still have a great amount of money invested into equities, but that money can be invested still more for longer term growth. The third thing you want to do is you want to understand what you own, and you want to understand the purpose of each account. So again, his one account that provides $900 a month is not going to have the same potential of growth as his stock market part of his portfolio. But that bucket of money was designed to provide him and his wife income for really the rest of their lifetime. The other thing that we had talked about is we had talked about the fact that things are going to get more expensive in the future, meaning that, at some point he's probably going to come into the office and say, hey, guys, I need to get a pay raise. And so taking a portion of the money and carving it into a bucket that would be designed at some point in the future to give him a pay raise was another solution. In the long-term care or the long-term growth part of the portfolio, knowing what you own, what we did is we went through a process and, looking at the investment methodology that we use here at the firm, we looked at identifying companies that were cash rich, companies that had low debt, companies that met a certain profit margin, companies that had a competitive advantage, or companies that were needed on a daily basis. And by doing so, it allowed us to selectively identify which companies might be right in his portfolio. So in that case, if and when there is some type of crash that happens, if you know the companies that you own, and if you have money that's not exposed to the stock market risk, instead of going into a crisis situation, it could create a buying opportunity in his situation. Probably makes him feel a lot more comfortable that says, if a crash happens, it's not going to derail my retirement, knowing that I just retired in the last month or so. So if you're worried about the stock market, you want to look at maybe adding in a downside risk management program. If your advisor hasn't reached out and talked to you in the last year or two, or maybe if you're getting closer to retirement time and you've had a set it and forget it approach, you've not worked with an advisor, but you're within 5 years of retirement, it could be an important time right now while the market is at a record high to run this fire safety drill, get that independent portfolio analysis, and that is one of the things that we can do for you in that retirement team action plan. Or if you want to get more in-depth information about what the economic strategy is for 2025, go online, arhq.com, sign up for one of our economic summits, and we'd love to have you come out and join us at our upcoming meeting.
Just click on the events tab over there at arhq.com to find a slew of events that they've got going on, including that economic summit happening in March. You can register for any of those events that work for you. Or, if those times don't work out for you and you want to just skip the line, so to speak, and get in front of the team at America's Retirement Headquarters, you can do that by just clicking there right on the website, arhq.com. You can give a call as well, find out more about how much risk you're taking right now and, how to maybe reduce some of that, especially as you get closer and closer to enter into retirement. 419-794-3030. That's 419-794-3030. President Trump recently signed an executive order directing the U.S. Mint to stop production of the penny. It currently costs about 3 cents to produce every penny, so you're losing money to make them. It makes kind of sense to dump it. That could save the government around $200 million a year. Now, you guys do that analysis of retirement plans for any prospective client coming through. What are the easiest ways you find to help save those clients money?
Well, I love helping clients save money. We think about it with winter right here in Northwest Ohio. Before long, it'll be spring, and, you should be thinking about spring cleaning your finances. That's one of the areas that we help with, trying to help cut costs in retirement time. And, if we think about what are the biggest impacts that we can have in helping people cut costs, is we put together what is called the Retirement Team Action Plan. And you can get more information about how to get your Retirement Team Action Report at arhq.com. So at our website, you'll see that Retirement Team Action Plan. We'll look at ways to help you cut costs in retirement. But what we're going to do is we're going to help you cut costs on things that I think are really wasting money. And I'll give you a couple of examples here. Here's 4 good examples. Number 1 is wasted fees and expenses. A good example that we find when we do the independent portfolio analysis is older variable annuities. So when you look at a variable annuity typically has mortality expense ratios. It could have admin fees. It could have sub-account cost. It could have rider fees. So, when you see these fees and expenses, it's not surprising that, over the long term, 30, 40, 50% of the total return of an account is eaten up in wasted fees and expenses. And that could be a way to help eliminate some of the cost with the newer product designs that are out there today, and or simply eliminating that annuity altogether. Now, number 2 is overpaying for management fees. When you look at it, a common approach today is to pay for investment management fees. And, with investment management fees, you're paying an advisor to manage your portfolio. And oftentimes, if you look at most of the companies in town or in the U.S., what they do is they then will work with a third-party money manager, meaning that somebody else is managing the money. And then ultimately that person is picking, mutual funds or ETFs that ultimately is buying various stocks. So you've got a couple layers when you add it up. And when you add it all up, it's like which of those layers can be eliminated. In our approach that we use here with Retirement Guys Formula, we, in many cases, will go direct to the market. So if we do an analysis from our team and we feel that, a group of stocks that meet our criteria, cash rich, low debt, high profit, companies that have a competitive advantage or need it on a daily basis are what we want to own, for our clients and ourselves, we will go direct to the market and we'll purchase those and try to cut out some of the middleman in the expense ratios. So sometimes people are confused as far as what their total fees and expenses are. And in our independent portfolio analysis, which is part of that retirement team action plan, we can slice and dice and put that together for you. Another perfect example is why pay fees on fixed income investing when you can go out and lock in decade level high interest rates and get, investment products that have no fees or expenses. Another good way to cut out wasted cost in retirement. Number 2 is your biggest debt and your biggest cost in retirement time could be taxes. So you want to make sure that you're working on proactive tax planning. It's this time of year that taxes, begin to get important for people. And the reason they get important is because they're looking at filing last year. And, we can help you with that. Retirement Tax Partners is located right here at America's Retirement Headquarters. But not only do we help you with filing your federal, state, local taxes, we also prepare a one-if analysis for you, and we can show you here's steps that you could take to reduce your taxes in 2025 and beyond. That could be things like Roth conversions. It could be things like understanding how capital gains and losses work and managing that on a yearly basis. How shifting fully taxable money over into, municipal incomes for higher income earners can help you reduce the amount of taxes that you pay. Number 3 is what we find is healthcare costs can be ones that eat away and erode people's assets. Again, here at the headquarters, we've got America's Medicare Associates. Whether it's navigating the landscape of affordable healthcare and transitioning into Medicare, knowing the difference between supplemental or advantages plans, Troy, Dan, and Scott can help you look at your healthcare cost and on an annual basis figure that out. Number 4 is avoiding beneficiary mistakes. Not having a beneficiary form on file for things like your 401k or your life insurance, can be a disaster, or having outdated forms and not understanding, how taxes work when you say name a trust versus an individual of a retirement account. So these are ways that we can help you cut costs in retirement time. And I'd love to do that retirement team action plan and help you figure out ways to minimize the taxes and the cost and the fees and expenses that you pay in retirement.
If there was an omission in your retirement plan as it stands, a costly one at that, when would you want to find out? I dare say as soon as possible. Having that retirement team action plan is a great way to shine a light on those, not just shine a light, but also find ways to minimize, if not outright eliminate those unnecessary expenditures. All you have to do to get started, reach out to the team, 419-794-3030 to ask for your own customized retirement team action plan, 419-794-3030, or the website, which is arhq.com. We say so often here on the show that it's never too early to start planning for retirement. It's also never too late to really get serious about it. Some people do, in fact, get a late start saving for retirement, like comedian Ray Zawadi.
I'm in my 30s, and the closest thing that I have to a retirement plan is that map of the state quarters my grandma left me when she died. And yo, it wasn't even finished. But she left me this map like it was gonna change my life. She goes, Ray, all you gotta do, finish this, find Maine and Utah. And who knows what this is gonna be worth? I was like, who knows? Me, Graham, $12.50. Price of the quarters and the cardboard, I know.
Now, Ray or his grandmother were out there collecting quarters while you were saving dollars for retirement. What is the best way to turn those savings into income in retirement?
I love Ray's quote there, and I guess it dates me a little bit because I was pretty little when, I had got one of those quarter maps as well. Mm-hmm. So I don't know if that's still a thing that we do for the younger generations or not. But what a great point. And what people are looking to do is they're really looking to turn savings into income. That's what retirees want to do, right? They want to turn those quarters, those dollars that they've saved up, and figure out how to turn it into income. So one of the things that I want you to do is I want you to go on Google and type in independent income system. And within the independent income system, what you could find out is how we here at America's Retirement Headquarters help you create a sense of purpose for each of your financial accounts designed to accomplish things like providing reliable income or giving you a pay raise in the future, where to position assets for long-term growth, why it's important to have money set aside for emergencies, how to put a shield over top of your assets to protect you from unexpected or unplanned for healthcare crisis, and ultimately how to plan your efficient estate. The thing that I like about this is, taking savings and turning it into income is a controllable item. So a lot of times investors want to talk about, the market performance. And of course, I love talking about market performance. We'll do that at our upcoming economic summit that we have coming up, which you can get all the details at arhq.com. Click on the events tab. But, when we're looking at turning savings into income, again, it's a controllable item. Even though at the economic summit, I'm going to talk about the stock market, I'll be the first one to say the stock market doesn't care what my opinion is. So here's how you can turn savings into income. Number one is create a bucket strategy. So for the money that you need, short-term liquid that gives you the peace of mind, consider using the high-interest money market accounts. Rates are still at a record level highs. Maybe they've come down a little bit over the last year, but still putting that lazy money to work. Using CDs or fixed rate annuities to lock in rates for a longer period of time for money that you're not going to need for a while. Utilizing income riders if you wanted to have predictable income on things like index annuities can be a good option. If you have that covered, and that provides the left side, meaning that reliable income, that pay raise bucket of money, that current income needs, and the emergency money, then what it does is it allows you to have a bucket of money designed for long-term growth. And when you're looking at long-term growth, equities or stocks can be a great part for your long-term growth bucket of money. And when you're looking at the stock market, you can look at dividend-paying companies. So not all companies pay dividends, but there are companies that you could select from. So whether the price goes up or down, usually dividends are more consistent. So if you can get in a scenario where you're living off of the dividends and interest generated, from the stocks and bonds of your portfolio, the day-to-day up and down noise of the market becomes less relevant. And the third category would be to add in maybe non-correlated assets or things that don't zig and zag all at the same time, would be to consider the possibility of like publicly traded real estate investment trust. REITs are usually investments that are designed to generate income. Again, there can be pros and cons how those work overall in the portfolio. But if you've got savings build up, so if you've got more than $250,000, whether that is savings that you have set aside in your bank account, that could be savings that you have built up in your 401k through work, and you're within 5 years of retirement and you want to figure out, how to turn that into income. Again, the independent income system is a great video, at least in my opinion, because I created it. But it's a good video to give you some, guidance about how we do it here at America's Retirement Headquarters. Second thing is you can come to our economic summit. You can sign up for that online, arhq.com. Or if you want to jump to the front of the line, just give our office a call, schedule a time, and we'll put together a retirement team action plan. That retirement team action plan is going to give you 2 pages of threats and opportunities that allow you to make a much better educated decision about how to turn those savings into income to give you peace of mind, not only get you to, but through retirement time for the years ahead. So thanks for tuning in. It's great to have you with us. Enjoy so much. You tuning in every week, and thank you so much.
Again, it's important to remember that those retirement accounts are not retirement plans. Just by knowing that is one step towards controlling what you can control. The next step, of course, is having the team at America's Retirement Headquarters help you out with that. All you need to do to get started. Reach out, set up a time to speak with them. Go to arhq.com, find out more about the team, the upcoming economic summits that they've got going on, register to reserve your space for those, or if you want to jump the line, get right in front of them. That number, 419-794-3030.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.